Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 24th of January. S&P Global Services PMI and Composite and Manufacturing came, well, a little bit higher than expected and way higher than the previous one. So actually, services and manufacturing PMI are going higher despite the fact that we want the economy to cool down and to slow down. So this kind of economic data didn't have too much of an impact, but it provided a bearish sentiment on the day. So after yesterday's and Friday's big push on the Nasdaq, we are just remaining range-bound sideways trading. Honestly, specifically for me, I hate this kind of days because I love to trade the trend, and these kind of days in which the market doesn't want to move and doesn't want to trade on critical levels, it's not worth it for me. So Nasdaq is 0.05 in the red, basically flat. And if we check the daily, we are here with a nice doji, upper doji, so it's not indecision, it's equilibrium. And I think it's time for the market to rest a little bit and to maybe go down, pull back, hold this blue dot line that is last week high, and start continuing going higher to break the 12,000 mark on the Nasdaq. That would be ideal because we just don't want to have unhealthy price action. We just want to consolidate and to break higher with higher lows and with a nice pullback and possibly a bull flag to the upside. That's what happened the last time, this pullback, holding this key pivot, and we push higher. So we want to continue seeing this kind of price action. So today, without economic data, important economic data, and just after two big, huge bullish days, it's time to rest. The kind of things that we want to pay attention, though, it's tomorrow. It's not an important day either unless you trade commodities like crude oil and gasoline. But on Thursday, we have a GDP. We want it lower than before. So to show the Fed that economy is slowing down, we have also jobless claims and continuing jobless claims. We want them higher. And finally, look at this Friday, PCE, Personal Consumer Expenditure Index. So this is PCE is the preferred Fed data in order to see how inflation is going down. They don't take too much attention to the CPI, they watch the PCE because it's from the consumer. We want the income to go lower, and we want the spending to basically go negative. That would be super cool. The core PCI, though, if these go higher, remember that core CPI went higher, but the general CPI went lower due to the decrease in energy, but actually the core CPI, it's showing stick inflation. We want the PCE, core PCE, to also go down. That would be the bullish scenario in order to finish the week on a high note. Let's check real quick how Nasdaq tech companies are doing. Apple, super strong, 1% is actually the one that is showing more strength. Microsoft is basically going sideways. Remember, look at this. We are waiting for Microsoft to show after the market close earnings. So I think a lot of people interested in Microsoft are waiting for those earnings, and the Nasdaq is also waiting. What kind of earnings are we going to get? I honestly don't know. I don't know if bad earnings would be good, if good earnings would be bad. I don't know anymore because we are in a situation in which perhaps we are recovering and we want to see good news to be good news, but we will have to wait until market close to see how market reacts. Honestly, I'm not. I'm expecting good earnings. I don't know how the market will react, but the guidance is what is important during this year, 2023. Microsoft guidance will provide a lot of information regarding how they are managing the layoffs and how they are managing their losses and expenses. That would be more interesting to see and to watch rather than the actual revenue and EPS. So watch out for that. Tesla in the green. Look at this pullback. I took a nice short. This was awesome trade. Amazon and Google and overall XLY is barely in the green, 0.11. So consumer spending is slowing down. Amazon, if you check the daily, it's right there at the break of this pullback. Sorry, of this pivot. So a lot of tech stocks, if you check the dailies, look at Apple, is showing a lot of strength to the upside, and we are just recovering, doing higher highs, and perhaps the next stop is going to be basically, I think, this pivot, and also the next one is going to be this false breakout that we got on 13th of December, the CPI on December. So overall, Nasdaq is going pretty well, and also important to note, crude oil, look at this. This is Crude Oil Futures. We are seeing minus 1.40%. It is always good to see crude oil pulling back, but don't get me wrong. I think crude oil is going to break this $83 a barrel, or perhaps are going for that 88 and 90. I don't know why the strategic reserve of petroleum of the US just said that they are going to again refill at 80. Remember, if we check 80, this is around 80. So this is going to be 80. On December, they said that they were going to replenish the reserves at $70, and that acted as strong support with higher low, and that started the bullish run that we are in right now. Now they are saying at 80, so I don't think they are going to move the market down. 80 is going to be a strong support for the crude oil, and I think it is going to push even higher. So that's bad news for the CPI, the future CPI, because energy takes a big role on that. But be careful with that. Follow this chart, this market, because it's going to be important in the near term. What else? Dollar is just, after this big strong support, it's just barely just going slightly higher than 102. 101 was my target, and I think it's going to be around here throughout all the earnings, tech earnings in February. A weak dollar and a sideways dollar is good for earnings and for the tech companies that trade overseas. So I think no one is going to push the dollar or to go big on Forex after earnings. After earnings seasons ends. So yields are quite important. Today they are pulling back after 3 days of strong green candles, and you want this. At least you want divergence between yields and the overall market. After Fridays and Monday, we saw the yields market, the bonds market, pushing higher, and at the same time the market was going higher, and that's quite surprising. So you want to see this kind of pullback in order for the market to go higher. We don't want higher yields, we don't want higher interest rates, so going higher is bad for the market. The 10-year is also pulling back a little bit, but take a look at this again. This is the futures for April. Interest rates are still priced in at 4.80. Almost 99% of the analysts are expecting the Fed to hike the interest rate by 25 basis points. So that's almost done. They already admitted that in a speech last week. So I think 25 is going to push 475, 450, 475. So we are going to be at that level until April, until September, but at December, markets are pricing in a big 25 again, 25 basis points cut, despite the fact that Feds were strongly saying we want interest rates to be higher than 5%, that's different than the market are pricing in, and also they are not willing to cut any interest rates this year, and that's not what markets are pricing in. So again, we are still seeing this kind of divergence between what markets are expecting and what Feds are actually willing to do. Let's go back to the Nasdaq and finally take a look. If we broke, well, we are still basically, I mean, if we maybe can see this, this is it's not a strong trend line, but we are basically more or less trying to break this. But I think going sideways today is good to let the market rest and give participants some time to take positions and to take profits. And tomorrow, there's nothing new on economic data, but Thursday GDP and Friday PCE is going to be awesome for opportunities. So be patient and wait for those opportunities on your critical levels. I will be watching this NQ 11,750, this last week high, in order for the market to go back at least at these levels, and then I would like to go bullish for the break of 12,000. That would be my preferred setup, and that might happen at the end of the week if PCE shows slower inflation. So that would be nice. So as always, thank you for your time. If you found this video useful, please support the channel and click the like button and subscribe to the channel. Receive notifications. Remember that I upload new videos every single day for market forecasts, market updates, and market recap. I appreciate your time. And remember, the trading day is not over yet. Be careful with these kind of days, because if you don't play the streams, you can get chopped out. So discipline and risk management are key for success. Be patient, because Friday and Thursday are going to be big. Stay safe, everyone.